everyone, my name is Adana Masara. Today I will explain the distinction between barren plants and biological assets in a palm oil plantation. Firstly, oil palm trees are classified as barren plants under MFRS 116 property plant and equipment. This is because the trees are used repeatedly to produce fresh fruit mulch or FFB over many use and are not intended for sale. Therefore, they are measured at cost less accumulated depreciation and impairment loss. On the other hand, FFB are classified as biological asset under MFRS 141 agriculture. FFB undergo biological transformation as they grow and mature before harvest. As a result, they are mature at fair value less cost to sell, and any change in fair value are recognized in profit or loss. The distinction is important because it ensures faithful representation in the financial statement. The oil palm trees are long-term productive assets, while the FFB are agricultural produce that will be harvested and sold. Therefore, different measurement bases are required to reflect their true economic nature.
So my name is Fatin Arya and I will be presenting the question to you from the plantation division case study. The CFO's approach does not achieve a faithful representation under the IASB of conceptual framework. Firstly, faithful representation consists of three characteristics, which is completeness, neutrality, and freedom from error. In this case, completeness is not compromised because the CFO ignores the biological transformation rates of image FFP. Neutrality is compromised because the valuation is influenced by the intention to report a higher asset and profit to attract investors. Freedom from error is also compromised because the CFO assumes that image FFP have the same value as harvested FFP, even though bad weather or disease could reduce their value. And secondly, although both immature and harvested FFP are biological assets under MFRS 141, their economic substance is different because immature FFP are still growing and cannot be sold yet and are exposed to uncertainty. And finally, a more faithful valuation should consider the current stage of maturity, expected yield, and biological transformation rates and cost to sell. This provides information that is more complete, neutral, and free from material error.
Assalamualaikum and hi, my name is Nur Ali Shahira and my metric number is 313929. Imagine your boss asks you to increase the company's profit by RM 6.5 million, but you know the calculation is not completely accurate. So, what would you do? As a junior accountant, following the CFO's instruction may violate the integrity, objectivity, and professional competence because the inactive FFP may be overvalued. Therefore, what should I do? I should review the accounting standard, gather evidence, and discuss my concerns professionally with the CFO. If the issue is not resolved, I should report it to the appropriate internal channels and keep the documentation. As an accountant, our responsibility is not only to the company, but also to the investors and other users of financial statements. Therefore, we must ensure that the financial information is reliable, ethical, and fair.
Hi, my name is Natili. I'm going to present a case about Apex Holding Berhad. I will explain the classification of the properties first and then continue with the explanation of the measurement part and also the problem with the CFO. What is the problem? So let's start with our discussion. Alright, for property 1, which is the corporate and retail tower, the case says that the 7 floors are leased out to independent retail businesses under operating leases to earn steady rental income. So this means the company is earning rental income from external tenants, and because of that, those 7 floors should be classified as investment property under MFRS 140. Oh, but then there's another part in the case where it says the remaining 3 floors are utilized by Apex Holding Berhad as its corporate headquarters and administrative office. Okay, this means the company is using it for its own operation, and that part should be classified as property, plant, and equipment under MFRS 116. Oh, next is property 2, which is the horizontal plot. And the case says management has not yet finalized its development master plan and is currently undecided whether they will develop it into residential houses for sale or hold it long term for capital appreciation. So basically, the use is not decided yet. And under MFRS 140, land that is held for uncertain future use or for capital appreciation should be classified as investment property. So property 2 is investment property. Then for property 3, which is the Zenith condominiums, the case clearly says the company's business model is to aggressively market and sell the individual units to home buyers. So, This one is very clear. It is for sale to customers, and under MFRS 102, this should be classified as inventory, not investment property. Now moving to part B. First, I want to explain the problem with the CFO's decision. So, the CFO wants to classify all three properties as investment property under MFRS 140 and apply the fair value model. But the main problem here is this not reflect the real situation of the company. First, it's not neutral because the decision is made to increase profit and asset value, not to show the real economic situation. Second, it is not complete because it ignores important facts like property 1 has office usage and property 3 is actually inventory for sale. Third, it is not accurate because property 3 does not meet the definition of investment property under MFRS 140. So using fair value model is wrong. So in conclusion, even though the CFO wants higher profit, we must follow accounting standards properly because financial statement must show the true picture of the company, not just high numbers. Okay, that's all from me. I'll pass to our next presenter. Bye.
Hi, my name is Suprita Anupamasawadi and my metric number is 313273. Today, I will be presenting the answer for Food Manufacturing Division, specifically question A and B. For question A, firstly, the product recall cost should be recognized as a provision under MFRS 137. This is because the company has present obligation after announcing the product recall. It is probable that outflow of economic benefit will occur and amount can be estimated reliably. Therefore, the company should recognize a provision of 1 million ringgit, which is the most likely estimate. Second, the consumer lawsuit should not be recognized as a provision. This is because the legal advisor estimate only a 30% chance that the company will lose the case. Therefore, the outflow of economic benefit is only possible under MFRS 137. The company should disclose it as a contingent liability instead of recognizing a provision. For question B, uncertainty influences the recognition decision under MFRS 137. If an outflow of economic benefit is probable and can be estimated reliably, a provision is recognized as in the product recall. However, if the outflow is only possible, such as the consumer lawsuit, with only a 30% chance of losing, the company does not recognize as a provision. Instead, it discloses a contingent liability. This ensures the financial statement provide a faithful representation of the company's financial position. That's all from our group. Thank you for watching.